Welcome back to BestProp4U. Today we are taking a look at Bitcoin, which is seeing a slight recovery today, but that comes only after four consecutive sessions in the red and at a quiet, tight price action. Fundamentally, Bitcoin is stuck, heavily, of course, influenced by today's also macroeconomic, or today's, not today's, I would say, these periods macroeconomic data. US PPI specifically for today, though, for July was released and coming in softer than expected and will be below the previous month, which of course, reduces inflation fears and increases the odds that the Federal Reserve will not go to hike as much as expected, at least what was expected before, which is a bullish catalyst in some sort of for risk assets like Bitcoin. Looking at industry specific news as well, sentiment is it remains mixed. We are seeing like a BitGo seeing 80% revenue jump, but more importantly, Goldman Sachs making a 2.5 billion acquisition to enter the Bitcoin yield market. Despite this, however, the broader indexes on crypto are trading lower, and digital asset treasuries are leading crypto stock sell-off as well. So let's take a deeper dive into the technicals to see how this might be playing out. We are below the RSI 50, and that means that we sentimentally remaining on the up to the bottom of the equation, and we are also above the 64,000 mark, which is the middle Bollinger Band over here. But let's not forget the middle Bollinger Band, when markets are flat, isn't really causing much of resistance. We are going to see in this case, however, we have had double top resistance in both cases when prices moved above the median, but this is to the downside. So if we close today above the median line, above the double top over here, we see at 64,500, or even in the green, that's definitely going to be one of the positive days of the past few sessions. So the big question, though, I do have is that we need to have the answer for is whether this is the 50 Fibonacci over here that we corrected down to was the bottom, or are we going to see another flash towards a 50 for a double bottom over here, or perhaps a 61.8, which would be a dip. Quick parenthesis here, I have brought down the Bollinger Bands to 20 from 25 typically, because that we need to actually showcase over today here, because the price action is tightening, that volatility is also getting squeezed, which of course suggests that we're going to, in the following days, likely see an actual breakout. Now, we have the important cluster here at the 50 Fibonacci, which is $62,180 or so. The 50% and a double, well, you can consider this a double bottom, to be honest. It's not really the ideal formation, but one way or another, if we do, we have stronger support than just one candlestick over here. And if we do fall lower towards a 50, that might be our double bottom to consider, of course, going long. Losing that level is going to get us down to 61.8. As long as we remain below the RSI 50, the situation is unlikely to change. Now, on the daily also, we're going to see perhaps 64K being taken, but let's not forget that we have had two moves close to 64.50 here, and they were recoiled. Okay, this is important for context, because it tells us that if we don't break above 64.50, it's unlikely that we're gonna have a day closing with RSI above the 50 as well. So the upside potential, obviously, in case the 50 is in as our bottom, would mean that in the longer term, we might go as high as the 72K. Of course, the previous high at 66, 67K, let's say first, and then 68K is the golden Fibonacci extension here that we could always remember in case, of course, we do break above the upper Bollinger Band at 65.40 and the previous peak. Obviously, down on the 4-hour, the consolidation is even a bit more obvious. The bottom of this current range sits around 62.20, okay, and equally we would have to go and draw that out, because essentially we've put an impulse in the pullback again, as we did have in the longer time frame as well. And in this case, we did come down to 61.8, and we managed to actually close above it quite a few times. The first and initial flash was the strongest, because since then we've seen flashes to the downside without breaking the previous high. That without that meaning much, of course, we could still break to the downside. It is positive, especially if we take into account that the 61.8 holds, and now currently we're trading close to the 50 Fibonacci, which is the middle Bollinger Band on the 4-hour over here, and still, however, below the neutral RSI 50 level. So this median line is a critical pivot. If bulls fail to cross and hold above 63.80, 64K, let's say, we can expect a rejection again back down to the bottom of the band near 63K. Okay, given of course 61.8 breaks, which would then open the door to 62,900, is the 78.6 Fibonacci, and kinda of cluster here with the bottom Bollinger Band as well. So we have already tested that Fibonacci retracement, of course, of the latest short-term leg up. And if buyers can break the median line and hold above that level, it opens the door to, again, the 100 Fibonacci extension. First, of course, we're going to see the 61.8 Fibonacci. In this case, we have the 65K or so, and above the previous peak at 65.43, we do have a target of 66,430, call it 66.50. The Bollinger Bands, importantly here, are getting a bit more squeezed, but we still have some sort of flag-looking pattern to take into consideration. So as long as we are above 78.6, we can still consider this as an impulse and a pullback. I'm going to go down on the 1 hour, of course, to see what we could potentially do for the remainder of the session, or perhaps even for the remainder of the week, because tomorrow is actually the last trading day of the week. Without that meaning, of course, Saturday and Sunday, Bitcoin is not trading. Of course it does, but you're not going to find similar flows to what we used to see back in the previous bull run, right? So anyway, Bitcoin is currently consolidating between 64K and 63.30. Okay, a much tighter range, especially if you take into consideration that we saw price action going as high as 64.40 at some point just a few days back. So this is tightening, and the tightening for now, you know, it could be considered some sort of triangular shape, perhaps A, B, C, D, E, if we do not break above the previous high. For now, this can be considered still the case. So if we fail to cross above 64, we could still consider this as a triangle and have another flash to the downside. But if we do break higher, and because also considering that we have had 3 hours in advance, then this recovery from yesterday's drop down to 63 to 50 could continue, and essentially we might be looking for a let's say from there to there and all the way up there, potential continuation to 100 Fibonacci, which could bring us up to 64,520. Potentially that level might also align with RSI 1 hour going into the overbought territory. So because we are currently though pushing against the 1 hour up Bollinger Band, breakout above 64K is what we should be looking at. If we do see that break, the median resistance is at 64,500. Okay. However, be cautious as of false breakout at these levels. 500 point moves, $500 actually moves in Bitcoin are relatively small unless driven by a massive macro catalyst. Of course, on the other hand, if price reverses and breaks the previous bottom near 63.20, that would align with the lower Bollinger Band and will likely trigger a flash down to below 63.20, closer to 63k actually, since it would be a major support. So watch that 63,800 closely, because it is the median on the 4 hour, and trade the breakout on the potential 1 hour squeeze.